Today, volatility is
its wartime losses.
Market may be trying to figure out if they should listen to good cop or bad cop.
Certainly that's going to have an impact on global growth.
In the middle of all this, some players are reaping huge rewards. Can you guess who?
They're tech savants, highly quantitative, pretty secretive, smart, innovative. They're best in class at what they do, and they're sitting at the top of the totem pole of all the Wall Street firms.
So who are we talking about?
Jane Street.
Jane Street.
Jane Street.
Jane Street.
Okay, but why are they such a big deal? Well, the firm just made a record-setting haul, over $39 billion in 2025, outpacing the big banks and rivals.
The firm is generating billions of dollars. The pace at which it is doing that is unlike anything that I think people anticipated would even happen.
Even 5 years ago, it would have been unthinkable to paint a scenario where Jane Street would have pulled in more trading revenue than the biggest players on Wall Street.
Money-making at this pace has raised concerns that firms like Jane Street have an unfair advantage.
The high-frequency trading segment is under scrutiny after SEBI accused Jane Street Group of manipulating stock and derivatives markets, a claim the U.S. trading giant denies.
This unwanted attention is mounting and threatens to reveal more secrets.
Jane Street's combined the world of poker and the concept of solving problems really, really well.
So how long can Jane Street stay under the radar while holding the best cards on Wall Street? Once upon a time, Wall Street was like this. But the stock market has changed.
Imagine a high-speed game of buy and sell happening on computers all over the world every second.
A combination of innovation and a lot of money moving around very rapidly.
A human blinks their eye in about 400 milliseconds. In about that same time, a high-frequency trading computer can execute hundreds, if not thousands, of trades. That is the kind of tech edge we're talking about. It's not just identifying the right price, but being able to get there before anyone else to execute that trade.
Jane Street is the middleman. You can think of the apps Robinhood, Schwab, and the ability to buy a share of Apple. You don't know it necessarily, but there are players out there helping facilitate that order.
We have seen an explosion in the type of ways that you could trade any financial instrument. It could just be a plain vanilla stock. It could be a derivative tied to the stock. As these products get traded in different formats and in different geographies, there is always going to be a little bit of price inefficiency.
Price inefficiency means differences. By buying a bunch of something where prices are low and selling it where prices are high, you can profit from the difference. It's a process called arbitrage. And by doing this over and over in milliseconds, Jane Street is making billions. Increasingly, the firm has been holding some positions for hours, days, maybe even weeks. But its matching of buyers to sellers is why Jane Street and firms like it are called market makers. Their role injects cash into this system, aka creating liquidity.
Liquidity is money. And it's very important, particularly when an issuer like JPMorgan is launching a new strategy. The early days of an ETF are very important to provide more liquidity, and that encourages investors to come in and out of ETFs.
ETFs, or exchange-traded funds, are like a basket of assets that trade as one package. They're often cheaper than other investment products, helping more people get a piece of the pie.
20 years ago, I ran a big portion of JPMorgan Asset Management. I had heard of Jane Street, but I had no clue that they were an important part of the ecosystem. And that was really a reflection of the fact that ETFs were a small piece of the business at that point.
Jane Street's place in this ecosystem has paid off as the popularity of ETFs have exploded. More are coming to market every year,